we spent a lot of times like in the different incubators, Level 29, Station F, Kickstart Innovation, which is in Zurich, one of the biggest accelerator there, where we met a lot of financial institutions, Credit Suisse, PostFinance, Swisscom, where we saw what is the hurdle for institutional to come to decentralized finance and blockchain, especially on the tokenization. So, and this is where really we knew that there is something to do to bridge the two worlds.
Hi, it's Mind Crypto here. I hope we're having a wonderful morning, afternoon, evening, wherever you are in the world.
Remember, this isn't financial advice. Always do your own research.
Mind Crypto here, and today we're talking about Allianceblock NXRA. So we are ranked at 348, and we're currently sitting around the 7 cents mark, just over. We did scoot over the 8 cents mark at some point yesterday, and then we had that pullback immediately. So the market, as usual, always looks a little bit red over the weekend. It is what it is. For me, NXRA is so undervalued, it's unbelievable. I mean, looking here, market cap of 49 million, just under that 50 million. And Allianceblock and the team, Rashida Jaja, works so hard. Anyhow, please remember, this is not financial advice. I'm not a financial advisor. And please subscribe. Hit that notification bell. It doesn't take you a moment. I've got so many people that watch these videos that aren't subscribed, and you'd be doing me a massive favor. So we move over here. We look at the fear and greed index. We're currently down 2.36 in the overall market, down to that 965 billion. So we're just short of that $1 trillion mark, which we were over the other day. So there's been a real pullback. But yet we're still quite greedy at 56 at the moment on NXRA, which is down from yesterday. Hence, I'm guessing why we've had that quite big pullback. So I'm just moving over to Twitter, and I noticed this tweet via Krakow. Last guide to real world assets tokenization that every crypto user will ever need. Before we start, by 2030, tokenization is set to become the next biggest thing. According to the investment bank Citi, the market is projected to reach $5 trillion. And as we can see here, that is huge. We've got the debt at 1.9 trillion. We've got real estate at 1.5 trillion. We've got private equity at 0.7 trillion and securities at 1 trillion. So we're talking massive figures. We're not talking billions, we're talking trillions. What is it? Tokenization, real-world assets refer to the process of converting physical or tangible assets into digital tokenization on the blockchain of DLT. It represents ownership or rights to assets using digital tokens that can be bought or sold or traded on a decentralized platform. So if this isn't clear, imagine you're a passionate collector of toys and trading cards. Tokenization offers a way to transform these items into unique digital tokens or representations, similar to creating exclusive tickets for each piece. So, for example, let's assume you're a collector of trading cards featuring your favorite sports players. Instead of holding on to physical cards, you can tokenize them. This means assigning a digital token to each card, which is securely stored on a PC connected to the internet. Now, let's say you want to sell or trade one of your cards with a friend. Instead of physically handing the card over, you can transfer the token representing the specific card to your friend's digital wallet. By keeping the token, your friend can demonstrate the ownership. The beauty of tokenizations lies in its ability to facilitate easy buying and selling and trading of assets, regardless of geographical distance. And can you guess what's likely to happen in the future? Tokenization has the power to change how finance works by giving more people the opportunity to own and benefit from assets that used to be or only for the privileged few. So as we can see, real world assets are going to become easier to capture. So in essence, I put a video out the other week with regards to tokenization ownership, so fractional ownership. So in other words, you can buy a piece and essentially own some real estate. So we move over to Traders Magazine. This was out on July the 5th, and it says, in recent years, the financial landscape has witnessed the rise of decentralized finance, a disruptive force that leverages blockchain technology to revolutionize the way we transact and lend. DeFi has already somewhat disrupted the traditional finance TradeFi landscape, providing innovative solutions, creating greater ease of market access and challenging established institutions. While traditional finance, the legacy system, has long been the dominant system, DeFi offers the promise to increase accessibility, transparency, and efficiency. The convergence of traditional finance and DeFi represents immense potential for the future of capital markets, unlocking exciting possibilities. So we see here ripe for disruption. Traditional finance relies on centralized authorities to facilitate transactions, enforce regulations, and maintain stability. It also brings established and effective risk management through the separation of powers and segregation of duties, while traditional finance has been instrumental in fostering economic growth. It has often faced criticisms for its exclusivity, high fees, and limited accessibility. DeFi, on the other hand, represents a paradigm shift in the financial industry, operating on decentralized networks that automate and streamline many financial operations. Blockchain technologies enable easier, cheaper, faster access to capital through programmable digital assets and securities. New digital assets can be issued in minutes and their corresponding rights and obligations eroded and automated. The streamlined approach can accelerate settlement times, enable 24/7 trading, and provide near instantaneous access, improving the overall efficiency in capital markets. So, this is all leading to the future of finance. And we see here the future of finance, tokenization of real world assets. So, the emergence of tokenized assets, the rapid growth of digital assets has led to the emergence of tokenization. And again, this is a process that converts real world assets into digital tokens. So, tokenization allows for the seamless and efficient trading, investment management of these assets. Indeed, it's becoming a key driver of the digital asset adoption, as a Bank of America report highlights. And it says here, tokenized gold provides exposure to physical gold 24/7 real-time settlement. No management fees and no storage of insurance costs, analyst Alkesh Shah and Andrew Moss described. The reduced minimum investment requirement bolsters accessibility, so everybody can be involved, everybody can buy a piece. Meanwhile, fractionalization enables the transfer of physical gold ownership and value that was not previously possible. So tokenization is limitless to any asset, and its potential applications are vast. It can apply to real estate, fine art, and even intellectual property. So, advocates of incorporating real world assets in the blockchain champion the idea based on their belief that over time DeFi will offer unparalleled opportunities and market advantages to asset holders who find the benefit unattainable within the conventional financial systems. Decentralized financial systems hold promise to dismantle some of the constraints found in TradeFi and in turn deliver material improvements in regard to the market efficiency and opportunities for asset holders. DeFi minimizes or completely cuts out the intermediation systems found in TradeFi to effectively decentralize the back end of the financial markets. And this was noted by a Binance research. So you can see here how real world assets tokenized become legitimate bearer assets. So we got the off-chain formalization, so the representation of that asset. Got the ownership and legitimacy of the title and the legal backing at this point. Then we go to the tokenization process. We get the regulatory technology and security, which we know Allianceblock is and NXRA is really fundamentally focused on. And then you've got the oracles, which then leads to the origination of the RWAs that facilitate demand for RWAs and initial coordination with off-chain formalization and then back again. So that's a really interesting infographic there. So the tokenized revolution in real estate. So real estate is primed example of an industry that can greatly benefit from tokenization. Traditionally invested in real estate has been exclusive and an illiquid market with high entry barriers and cumbersome process, which it is, and we know that. However, tokenization could potentially change this by making real estate investment more accessible and affordable. So as we can see here, we've got retail, we've got office, industrial, and residential. This would all come into play. So this was back in May this year. Allianceblock ABO Digital to offer tokenized structured products. Allianceblock, a provider of block infrastructure that bridges traditional finance and decentralized finance, so this is their bag, has formed a partnership with digital investment firm ABO Digital to offer institutional and retail investors a compliant way of backing crypto projects through tokenization. The tie-in comes as tokenized assets continue to gain steam. And earlier this year, for example, investment firm Hamilton Lane offered tokenized exposure to one of its funds. So we're slowly moving towards that. The structured products under the Allianceblock ABO Digital Partnership will offer alternative fundraising options for crypto projects, such as issuing tokens to market makers and venture capitalists. Projects can also access liquidity from institutional investors. ABO Digital, the digital asset investment arm of ABO Group, which provides private financing for publicly traded companies, will help negotiate and structure the financial instruments based on a project capital's liquidity goals. Allianceblock will tokenize the assets and turn them into compliant, actively managed certificates, which is a type of structured product that lets an investor track and benefit from the underlying asset without having direct ownership. So as we can see, things are moving forward. Some would like it to move forward far quicker, but I think if we look at tokenization as a process, I actually think this is the next thing. I think what comes first is the tokenization of assets, fractional ownership, which is really, really important. I'm going to be quite honest, Allianceblock is already doing this. This is exactly their bag, the TradeFi DeFi spaces within the digital assets arena. So you know me, I love a bit of NXRA. I'm a long-term investor and I love the team and I think they're working very, very hard. Anyhow, remember this isn't financial advice. Please subscribe. Please hit that notification bell so that you don't miss any further videos. All the best and I'll catch you later.
Remember, this isn't financial advice. Always do your own research.